Welcome to today's video technical update presented by CMS Forex. It is Monday, December 28th, 2009. I'm Fan Yang, your technical analyst, and I'll go over some developments in the Forex market. I'll follow up on some of the dollar crosses covered last Wednesday, as well as take a look at the Euro-Pound pair. This video is being prepared at about 3:15 p.m. Eastern Time, near the end of the US session. We'll start with the Euro-Dollar pair. We were here last week with this first sign of reversal, at least for a minor correction. So far, the market has not shown any increased momentum towards our power line here. It would be preferable to see some topping action somewhere here, or even if it retraces back up here, then we could have a swing projection. At the moment, it's slowing already, so we may but still it's a little oversold, so I would say we may want to wait out a little bit to see if the market can continue to reach some retracement levels before considering the further bearish outlook. Looking at the 4-hour time frame, we see that this is the bottoming action at around 1.4250. And now we're at some very short-term resistance right here at 144. It looks like a very near-term double top may be forming. Then we would have a retest of 1.42 area in the European session, or Asian European session. That is a possible very near-term outlook, as we are in consolidation where we have thin trading in the holidays, and we might have this sideways action throughout the week. The pound-dollar pair is in a similar situation where the decline, basically the dollar strength has been consolidating a bit at this 78.6% retracement area. So we may see some further retracement, but right now, just like the euro-dollar, it seems to be showing some sideways action. Now looking at the 4-hour time frame, we see here this possible double bottom, then we may have a further rally. But anyway, this holiday period is expected to show some sideways action here as well. And maybe right after the new year, we may have further either decline or whatever clue that the market gives us. We may want to wait for that after the new year. A quick look at the Aussie dollar pair. We see that there's double top action, and we have a break of the base here, and now we have a retest of this base as resistance instead of support. So if we have topping action here and continuation, this is the projection, and this was from our previous post. Now looking at the 4-hour time frame, we see our wave structure a lot better. You see from here, all the declines have come in 3 wave structures, and the rallies have been in 2 wave structures. This was a swing, just a simple swing, but then here's two swings, and here's 3 waves again. 1, 2, 3. And then you have 1, 2, 3, this 2 wave here, and again this 3 wave down. And now we are having another retracement, so we may have, if it's a 2 wave retracement just like before, it could be a truncated one. It doesn't have to be ABCD like a Gartley. In any case, we are basically there's some resistance here with this moving average, so we may still, even if we have a decline, this may not be the continuation decline. This may just be within our retracement pattern, and we would expect another leg if it follows the same wave structure as the previous decline, or rallies rather. So again, we'll be eyeing this pair into the new year. While the US dollar is consolidating its strength, the Canadian dollar seems to push on. This is seen in the Canadian dollar daily. As we see, after 1 day of consolidation, we basically continue this decline from our downsloping trend line here. This is basically a downsloping channel trend line. So now we are testing this 1.40 area, this short-term support, and by the manner of this decline, it looks like it may break, even though it may pause a little as we are entering the oversold area. But this decline is suggesting that we may have a retest of this 1.02 area, which is really just a swing, swing projection such as that. So we may see, even at the 1.03 area, that we may see some bottoming action, and that may be a place to consider the bullish outlook. However, we do see that our decline. This is still in a bearish mode, so any kind of bullish outlook has to be monitored for early exits, as we may continue this consolidation for quite some time. But again, just like in all the pairs, as we near the year's end, we should wait for New Year's any clue to start giving us new direction in the new year. So again, we are expecting a test of this lower boundary of our support, and from there we'll get some more clues. If we have bottoming action and a strong bullish signal, then we may finally break this congestion, this resistance from this congestion pattern. Alright, looking at the 4-hour time frame, we see that this butterfly was followed by this decline, and again we are testing this short term, well in here it's intermediate term support, but we may break that and test this area. Right now it looks like if the market stops here and rallies a bit, we may see a bullish divergence, and that means in the very near term we may have some pause, but still in the intermediate term the projection is down to the 1.02, 1.03 area, and there we're going to look for basing action or bottoming action. If you recall from the previous coverage of Euro Pound, we are in a possible terminal wave here, and subwave, we may have finished our subwave number 2, and on our third one. But it is tested by this downsloping trend line, and if it does break, that's actually a counter trend breakout entry signal. So that would be a continuation of this. Possible projection for that would be a swing projection like this. But a conservative projection is just a truncated wave 5 with a target at 0.94. So if this breaks, that probability is higher. Looking at the 4-hour time frame, we see that in the short term we have resistance here, and it looks like it has topped with this engulfing pattern and this continuation. And this basically will give us a chance to assess whether this swing will hold. See, this short-term power line here at a little bit above 0.89 will serve as support, and if there is bottoming action here, and which is coincident to this moving average, 50 period moving average. So this area should provide support, and if it does, that means the market may continue to rally, and that increases the likelihood of this breaking, and this trend line is this trend line here, so it heightens that probability. But in the near term, we would expect some further retracement, and we'll look at the retracement, the manner of it, and how it comes out of it. So again, this would be waiting for the rest of the week, and probably it's probably better to wait for the new year, for when the entire market is participating and the clues that are given are more indicative of the global market. That wraps it up for today. Visit fxtimes.com for daily updates and technical fundamental analysis, as well as educational live events. Once again, I'm Fan Yang, your technical analyst here at CMS Forex, wishing you good trading.